Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, is Sonoro Gold's PEA still on track for delivery by the end of this month?
Sonoro Gold has suggested to me that the PEA will probably be ready by within the second half of August. They've shipped all the data to the independent consultants, Micon International in DE&M Engineering, and they're doing all the third-party verification needed to make sure that all the numbers make sense. And so what we are hoping to see in the next week or so, that probably won't happen until the second half of August. And what we're looking for is what the PEA says about a scenario where they operate a 15,000 ton per day open pit heap leach mine, but the drilling that they've done so far probably only will deliver a footprint of 25 to 30 million tons, grading somewhere in the 0.4 to 0.6 gram per ton range. And the market wants to see what is the cost associated with this, because the company has adopted a strategy that is quite unusual for a mine development project. They believe that once they have this PEA done, it'll probably be another couple of months for them to get basic permits needed to commence construction of this mine. And when you consider how long it takes in other jurisdictions to get a mine approved, this one has people sort of wondering, really? Can you do this in Mexico? Well, apparently you can. So the next big round of information for the market, besides what are the economics of this project, will be, okay, how do you finance this project? And in May, I published an outcome visualization where I took my sort of best guess assessments of the cost structures, took the approximate numbers that they have published, such as somewhere between a 70 and a 75% recovery, and their guidance as to what they think the tonnage will be. And I came up with an outcome visualization and extended it to 75 million tons and ran it at 0.55 grams per ton, and came up with a pretty interesting target outcome of about $346 million at 1,823 gold, using a pretty high 8.5% discount rate, and that translates into a $2.08 share price based on the 167 million shares that they have issued, which would generate another 17 million if the 56 million warrants at 30 cents that expire in 2023 end up being exercised. And if I use the 5% discount rate that the industry likes to use for its discounted cash flow model valuations, that number jumps to 447 million or $2.67 per share. Now, normally a project like this, after it's finished its PEA, it spends a couple years plotting through a pre-feasibility study, and then another couple years plotting through a feasibility study, and then maybe another couple of years with all the permitting headaches to end up being ready for development. But this year, they think that by the first half of 2022, they can be building this mine and have it operational within a year. And this scenario has attracted the attention of various groups. Although the gold price has held up reasonably well, sort of bouncing between $1,750 and $1,900, almost every junior gold and non-gold has been trending down, while Sonoro Gold has been trending up. And there's an audience out there which thinks that in the longer term, gold will end up being stronger, and they like this scenario of developing this project on a fast-track basis, even though it has only a 6-year likely mine life, but then at the same time proceeding with exploration to flesh out the 75 to 100 million tons that you need to have a 15 to 20 year mine life. And yesterday they published an update showing the results of sampling work they did earlier this year as they were building roads to tackle these other areas where they see this conceptual possibility of 75 to 100 million tons. And this area, they call it the Northeastern Corridor and the Southern Corridor. And they published a whole bunch of graphics with lots of different colored dots on it showing that they are getting decent gold values along the projections of these structures. And when I did my 75 million ton outcome visualization, that was based on sort of comments they had made in this outline where they described, well, here's where the immediate focus is and what we're going to accomplish with this 47,000 meters of drilling that has been submitted for the new resource estimate. But here's the potential for these other areas. And what the news release ended up telling the market is this area, which was largely covered with overburden alluvium and stuff so that you couldn't really see it and had never been explored or drilled in the past and had, relatively poor accessibility. As they cut the road through, they would sample the structures as they came across them, and they're getting the numbers that support, yes, when we go in here and start drilling, we will very likely see similar mineralization as we've already sunk 47,000 meters of drilling into. And in the case of the Northeastern Corridor, they even have some higher grade values. Don't yet know whether that will translate into something different than what we already know. This tends to be a low grade 0.4, 0.3 to 0.6 gram per ton gold system with a modest 3-5 gram per ton silver. But the silver doesn't really matter because its recovery is quite low compared to the 70-75% range for the gold recovery. So the stock has been doing reasonably well. It's managed to get up to almost 40 cents. It's above 30 cents now. It's attracting interest from a more institutional type of audience. The audience that bankrolled it last summer when gold was running through $2,000, they were primarily interested in the high-grade, deeper potential that the company said it was going to test for, because most of the historical work has been shallow drilling of the veins at surface, and they believe that this was higher up in the low sulfidation epithermal model. But the core drilling that they did last year demonstrated that when you go deeper, it doesn't get better. The boiling zone doesn't result in bonanza grades. So they limited whatever core drilling they did to define structure and pivoted to let's RC drill as much as we can and start building out this resource and preparing this project for a financing exercise, which they will kick off probably in September, October, after everybody has digested the PEA results. And they do plan to also resume drilling because although they don't need the extra 25-50 million tons right now, if they demonstrate to the market that, yes, we have the holes here that show the mineralization is present, and yes, it will take brute force money and drilling to delineate a resource, the potential for expanding this thing from a 5-6 year mine life to a 10 to 20 year mine life, it is there, and that's what this market wants to see with a junior right now. They want to see the prospect of cash flow sooner than later, and at the same time they want to see some tracking for a higher gold price. Quite likely they will have to give up some of that higher gold price by doing a gold loan of sorts where the lenders participate in the upside of gold if any of that should be delivered. But in terms of gold right now, the market's not sure where gold is going. Lots of gold bugs have given up on gold and decided that Bitcoin is the place where they want to hedge their future. We have seen inflation, but there are those people who say the inflation that we saw last month, 5% year over year, that's transitory. That's related to the economy snapping back after the disruptions of the COVID pandemic. And then there's others who say, no, we're looking at a wage cost spiral similar to the 70s. It's going to become systemic. It's going to grind higher. But then those who have been around long enough will remember that Paul Volcker had a very good solution for that problem. He cranked interest rates to 20% and basically crushed the inflation. And so there's fear that, if this inflation persists, they'll raise the interest rates. They'll probably tip the economy into the garbage can. And that really isn't any good for gold. Not really. And then there's the other concern is we're seeing the Delta variant rampaging through unvaxxed populations. It's having a less effectiveness than for those who are vaccinated. It's less effective than the earlier variants. And so there's concern that we're heading back into another shutdown of the economy. And this, of course, interests some people with regard to gold, because they're not looking at gold as responding to inflation. They're looking at gold as a hedge against extreme uncertainty. And there's even some people who think that Donald Trump will march back into the White House in August as a result of a military coup. And should that actually happen, well, then this country probably descends into civil strife of a sort that will be destabilizing for the whole world. And gold does have tremendous upside. But the bigger concern is that the pandemic will result in another shutdown, another slowdown, and they're not quite sure if printing more money to keep unemployed people from starving is going to really be the solution. But by next year, gold is expected to be trending above $2,000, not so much for inflationary reasons, but for reasons of uncertainty about where everything is going. The situation with China keeps worsening. China pushed back when it was accused by the United States and its allies that China has been officially involved with cyber attacks on American infrastructure, in fact, global infrastructure. These tensions, these geopolitical tensions between the great power, United States, and the emerging great power, China, this isn't going away. So the case for gold is strong, and Sonoro Gold is in excellent shape. Don't expect a PEA at the end of July, but by the end of August, we expect to see what their numbers are like and what the market's response will be to those numbers.
We'll have more with John Kaiser right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, did Consolidated Wood Jam ever get its drill program at Wood Jam underway?
Consolidated Wood Jam announced on July 6th that it did get a drilling program started at the Wood Jam property, which is northeast of Williams Lake in central British Columbia. It's a $1.4 million program. They decided to spot the first hole in the southeast zone, for which already a 400 million ton copper resource exists. It doesn't have a gold credit, even though there is gold in the system. They drilled this hole in an area where there is a northeast structural trend within the deposit that appears to have some gold enrichment, but because of the density of the drilling, Goldfields, when it did the resource estimate, didn't have enough data to really put a proper number on the gold. So they've drilled a hole. Apparently it has been finished to a depth of about 500 meters, and it looks promising. And hopefully this will allow them to start getting a handle on to what extent gold can become a part of the southeast zone copper resource. But the drill rig has now been moved to the megaton target, which is just to the northeast of the southeast deposit, possibly even an extension of it. It was on a different property, held by another group when Goldfields had this property. They did manage to option it late in the cycle before they end up pulling out of Canada. And they drilled a few randomly located holes because they didn't have any geophysics. The Wood Jam people did the geophysics last year and saw that, okay, this hole that was drilled is not near this target. There's a kilometer-wide IP anomaly. This can be just pyrite, but if it's got the chalcopyrite in it, it'll be a copper system, and they are drilling that now. And the big question everybody has is Williams Lake, central British Columbia. Oh boy, forest fire. And yes, Bill, but I talked to Bill Morton today, and he said We are lucky. We are not yet on any evacuation alert. The fires that are burning up here, they are farther away. But the temperature has been a problem. It's been so hot up there that the drills, the machines, they simply stop working because they overheat. So they've had to be very careful about that. But drilling is going well, and we'll probably learn in a few weeks whether or not the megaton target has the sort of disseminated sulfides with the target copper sulfides such as chalcopyrite in it that justify spending more on this target, delineating it. And they will eventually go back to the Deerhorn property, which is, not property, the Deerhorn deposit, which is to the north. It's a different style. It has a strong gold credit. That's where they spent their money last year. That's where they would like to revisit and see if they can grow this bigger and get a better handle on the gold distribution within it. But for now, it is the megaton target that's being tested, and what we're waiting for is to see if this IP anomaly to the northeast has the potential to expand the overall southeast zone resource by 50% or so and make this an even more robust project than is already indicated by an outcome visualization that I have done using the current copper price rather than the older 250 or so copper prices at which this southeast zone really didn't make the grade in terms of an economic situation. So everybody hang in there. Hope the wind keeps the fire going away from this drilling area. And the other issue that they've had, that even British Columbia is starting to have, of drillers simply not being available. So far, Wood Jam has not had this problem, but we cross our fingers. It seems like everything these days is conspiring against resource juniors to somehow undermine their efforts to deliver discoveries, even when they have the money.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, did New Origin Gold ever get its Sky Lake drill program permitted?
I last featured New Origin on Discovery Watch on December 29th when the company was still called Tri-Origin Exploration, and it was in the middle of raising $2.7 million through a private placement that was 22 million units at 12.5 cents with an 18-cent 2-year warrant. Bob Valiant, the founder who had been with this company for 20 years, had capitulated in August and done a 5-for-1 rollback, but he missed that wild funding window last year, tried to get post-rollback financing done at 30-40 cents, failed to get this done, and then in December he capitulated and essentially joined forces with Andrew Thompson, who's been involved with Latin American juniors, of which Sonoro was the one that was bought out by a major. And Andrew Thompson has taken charge. He's the new CEO. He brought Bill McGinty on board as a new chief geologist. Bob Valiant has moved over as chairman of the board. And then in February, they retained Mark Santa Rosa as the new president to be the face of the company. They've rebranded it. They renamed it to New Origin Gold Corp in April. But their plans to be drilling, have a winter drill program, got derailed in January when the Ontario Ministry of Mines told them that this permit for which they had applied just under a year ago, they wouldn't be able to grant it because of COVID restrictions. Now, apparently this has turned into a huge problem in that area between Red Lake and the Pickle Crow mining districts in northwestern Ontario, and incidentally, this area is now also the focus of forest fires, and some projects have been suspended, and there's even word that diamond drilling has been banned in certain areas because of fire risk. Now, the problem with it turned out was that the mines ministry said there are COVID issues relating to the various First Nations communities in this area, and it isn't quite clear what the game here is. The company has been working with the Mishki Gogamang community that is within that property's jurisdiction. The group is apparently not opposed to any to an exploration going on in their backyard. But the company has ended up with the impression that, well, it looks like what we need to get is a memorandum of understanding with the affected stakeholder and present that to the Ontario government so that they discover that COVID is no longer a problem. However, all these communities over there are in some sort of inertia. Nothing gets done. The company has been, trying to do Zoom calls and get stuff going. There's no opposition. It's just that when proposals get presented, nothing ever gets sent back signed or discussed as, we don't like this or we prefer that. And in frustration, the company decided, well, our North Abitibi project, which is close to the Quebec border of Ontario, well, we have a full permit for this. Let's change our focus to that project. And so they announced on July 13th that they were going to do a 3,000-meter drill program on the North Abitibi project. They have already existing gold mineralization in various shallow targets. There are some deep IP anomalies. These are deeper, expensive holes. They will drill a few of those to see what's there. The hitch with the North Abitibi project is that they need to spend $2 million, about $1.2 million more left to go to earn 100% from Vista Gold, which is very busy with its Mount Todd project in Australia, which spent over $100 million US dollars to deliver a pre-feasibility study on a 50,000 ton per day open pit mine. Once New Origin has spent another $1.2 million or so and given notice that it has vested, Vista will have 45 days to decide whether it can back in for 51% by spending $4 million over 3 years. And that doesn't seem like something that this company should do. It's got a very advanced project in Northern Territory of Australia. Why it would want to get involved with what is still a relatively early stage project, it's not very clear. But if the company can get that money spent, demonstrate that there is potential, it's unlikely that those deep targets will yield a no-brainer discovery holes so that Vista Gold has no choice but to back in. But even if it does back in, if it looks sexy enough when it does, it'll probably move quickly to spend that $4 million so that it has an additional emerging discovery under its belt. But if they decline and say, no, we'll just keep the royalty that we get in lieu of backing in, then New Origin Gold will be able to raise more money and advance the North Abitibi project. In the meantime, Sky Lake has part of the property, and the guts of it are burdened by a barrack back-in, which requires them to reimburse 3 times what New Origin has spent to deliver a feasibility study. And that's kind of a non-starter for a junior. Nobody wants to bankroll a junior all the way through feasibility study so that somebody else can walk in, reimburse 3 times, and get 51% of the asset. There's also some loose ends with some minor royalties and net profit interests that the company's been working on. So the delay with regard to the First Nations permitting and issue, that could be the time needed to get all these other issues straightened out so that if and when all these permitting issues get resolved, they'll end up having 100% of this project and not have to worry about explaining, oh yeah, Barrick will never back in, and then the audience will say, oh yeah, because the property, the deposit you discover is not very good. Okay, so why should I give you a bunch of money? It's kind of a catch-22 situation that they need to resolve. But it is frustrating that this whole area between Pickle Crow and Red Lake has become tied up in this permitting limbo, somehow obliquely linked to First Nations issues. The government is not being clear about what the problem is. There's no clear going forward strategy. And with the tragedy of these residential burial grounds associated with these residential schools, everybody's worked up in the First Nations communities is worked up about that. The governments are treading very lightly. And once again, the resource juniors, through no fault of their own, are caught in the middle of a problem that's frustrating their ability to make discoveries even when they are financed.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.